All right, so I've started recording. Okay, so I've started recording. So in the last class, we treated model 1 and 2 majorly of the stop on when it comes to what is it called? When it comes to primary identification of primary liquidity and all, and of which I said we should take it step by step because of model 3 and 4, which relatively look alike. So an example of model 3, I still used it on Friday to place a live call trade. One of you here that is in my premium, this thing, we had a live session on, no, not Friday, I think Thursday. We had a live session on Thursday. So this particular trade, I called it for him, this particular sell, and we targeted this low. I targeted this low as the target for that particular trade. So why did I take this trade? Okay, this trade is majorly based on, of course, I understand order flow and everything that is happening. And of course, this low right here is available liquidity. There's a real I just dropped on TA with Andre. You know, that my second pay, TA with Andre. It was the reason inside our reel that I used to target this low, which you guys will get to in the next class. This particular low here is the target, not even this one. This particular one, okay, that falls outside session. So that is that reel spoke about it, okay? So TA with 100, you see it on TA with 100 page. I just dropped it this evening. Okay, so majorly, this particular order flow, why did I take this trade? Number one, of course, based on that rule itself, this high was targeted as liquidity based on the same reason of that rule. Why? Because this high falls outside session. When I mean falls outside session, falls outside these my settings for New York, for London, for Tokyo, and the likes like that. So I see this as liquidity, and then what is it called? I call this trade as a refined PO high here for the sell, and then targeted this external liquidity. It is that simple. Okay, but what did I want to show you guys? I just wanted to show you guys based on structure. You know, this one is based on sessional liquidity, which we have not done, which we'll be treating under timing. Okay, but based on what is it called? Based on structure and what I've told you, this is model what? This is part of model 3. So what is model 3 trying to tell you? Model 3 trying to tell us that in case we have a stop hunt or liquidity hunt or whatever we may call, okay, or liquidity hunt, listen very well. For you guys that didn't get model 3 and 4, they are the same thing. The only difference is just the either double top was first induced or double bottom. So the stop hunt was made. After the stop hunt was made, then of course, price shifted to the downside. So after price shifted to this downside, I mean, in terms of shifting that I'm talking about now, I'm talking about in terms of momentum, you know, living in balance and all, not the other shift in market structure that we treated. You know, in shift in structure, we dealt with two categories. We spoke about the normal SMS that is formed through Q base, and also we spoke about it must have an imbalance, okay? So this is just a situation whereby we have an imbalance and price has already broken internal structure. This is internal structure because this definitely will be our external liquidity. This low I was targeting, that is our external liquidity, isn't it? So this low right here is external liquidity. External liquidity. So other that low, which is external liquidity, right? So this is our external liquidity, which is our target. Then majorly the break of this low right here is internal structure break, okay? So at times we call it internal structure BMS. You know, between this range, from this range low to this range high, right? So that is a swing, isn't it? Low to high, swing low to swing high. That is a swing. So this low right here is the what? All everything inside, you know, that is your structure range based on what we treated. So everything inside the structure range around that area are internal structure. So break of this low is internal structure BMS. Internal structure BMS. So after price break internal structure BMS, now what do you see that happen? Our what? Our phase 2, our third model or fourth model happen. So what do I mean by that? Let's bring out the skeleton form so that we'll understand better. Okay, let's bring out the skeleton form so that you understand what I'm saying. So model 2 stays, model 3 stays that just as I show for you guys, we must have a stop point, internal structure BMS, then a retracement immediately. Then after the retracement, I now said immediately before the external liquidity, that is model 3 and model 4. Before price get to the external liquidity, which is this low in this scenario, sorry, the screen I'm using is kind of small. So I just quickly lay on the screen so that I can quickly use that to teach you guys. So model 3 priority is our external liquidity, of course. So this is our external liquidity. So everything happened within before the external liquidity. Very, very important for model 3 and 4. Okay, so for model 3 and 4, then we have, before price break this low right here, internal break of structure, BMS, internal BMS. So I'm trying to, okay. So we have the internal break of structure. So after the internal break of structure, then order flow happens. Price will retrace immediately, then create another lower low. Model 3 now says that the new lower low that is created within, what is it called? Within your internal structure, okay, before price gets to the external liquidity. So it says that in and out we have this BMS, that this new BMS is the minor break of structure. So that is what it is saying. That is the minor break of what? The minor break of structure. Okay, that is after internal structure BMS, price could have still decided to just retrace deeply and use maybe this demand to continue order flow, but it didn't do that. What did it do? After tapping into this demand, you know, it could have induced this as liquidity and still continue order flow. But after tapping into the demand, what the price shifted again towards a new demand within internal structure, created another break of structure. That break of structure is now the real minor break of structure. That is what it is saying, such that the immediate high now formed, either price has induced it or not, is not your concern yet. The immediate high now formed is now the primary liquidity you expect price to do. So that was exactly the type of trade. You can ask him, he's in the Grulonel. So he's actually in my trade idea package, I mean my signal package channel. So you can ask him this trade, we took it together on Thursday. Okay, so we took this trade together on the, what is it called? Thursday. He's in the premium channel. So that is exactly the idea. Though I didn't tell him the idea of how I took the trade because the trade was actually impromptu, you know. I just had to like attend to him. I didn't have chance that last week really much based on what happened and all that. So I just had to like ensure that I had that session with him. So it was even impromptu, like within 1 hour, you know, it was even late in the evening. You see that it's fall outside my New York settings. My New York settings ends at 5 p.m. Nigeria time. So you can see that this starts around 6:31 thereabout. So for you to know that it is late in the evening and all that, it was impromptu. So you will be wondering. So it's not just, you see people, they will just tell you this high is an inducement or something like that without any thought process. There are a lot of thought process to why a high or low is an inducement. For me, apart from this structural way that I'm teaching you guys, okay, the simpler way is because this high right here fall into session. And a high that fall out of session. And a high that fall out of my session settings, okay, for every session I want to trade, or even if I want to trade outside session, even outside session, I must still anticipate a high or low that fall outside session to be induced. So that is it. It is just like magic. That is how the algorithm is designed. Trust me. And why is my target also this low? My target also is this low, not because just of order flow, no, because price has shifted. You know, we already have an internal break of structure. Now we have a new break of structure, minor break of structure, because minor break of structure is what shows us that external liquidity will be broken. Now we have a new break of structure within order flow to the downside. And the question now is, do we have a roadblock here? Everything that we have here, is it a roadblock or is there an available liquidity? What do I mean by roadblock? Roadblock is, in my own language, when I'll be teaching you roadblock simply means that every of the other flow happens within session. If every of the other flow I see around happening in this session, let's say this low is the last low I see, and it's fall within session, I won't be targeting this external liquidity, especially the part that it is late in the night. Trust me, price will not come and raid it. Price may use it to still continue, first even do a more deeper retracement. Maybe even if price will create lower low, price may come all the way to still use this external. So that is how a daily cycle, when we're dealing with daily cycle and all that, you will see a complete daily cycle, and you actually like get to appreciate things the more. Okay, so you actually like get to appreciate things the more. So the major reason why I can confidently target this low that particular day is because it falls out of session, and it is even the external liquidity. It is that simple. It is that simple. I can show you that over a million times. Like I mean over a million times. For example, let's say I miss this buy here. How would I have taken this buy? Would I have taken it here? Never. I wouldn't have taken my buy here. Even though you see, oh, for time frame difference, you know, that is where it becomes, phase two becomes more interesting. Because for time frame difference that you guys have understood, you guys would have been like, oh, this one, it is all mitigated. This is your demand and all that. In fact, a normal inducement trader that you see around would have wanted to trade this demand here and take this demand, because most don't actually understand the logic behind all these things. But some of them can, in a cramming way, can actually like identify most of these things and use it to trade well. It happens. But if you don't have the thought process, it will be difficult for students to actually relate well. Do you guys understand? So this particular guy here, why is he a trap for me? Why will I be looking at from this particular low to this low as a trendline liquidity? Not because it is trendline liquidity. I've spoken about that before, but because it fall out of session. This low, all this low, all of them fall out of session. And the fact that they now form trend line means that, oh, you can now see them as trend line liquidity. So that's why I don't like drawing. Most I don't like drawing trend line liquidity. I just draw it straight like this. That's it. I just pick the last low. That is liquidity. Okay. And immediately price induce it. In fact, you might have been waiting for this and missed the entry. But once price induce the liquidity it wants to induce, then the next thing is to actually take entry. Immediately price induce that particular one, the last one that fall out of London session. What do you see? Price what? Price start buying. And where is your target again? Your target above also is that particular place. So my target now becomes, since price has already shifted and starts being bullish again, that is, we already have a minor break of structure here by breaking this London high. Then I can start targeting this high first. Okay, immediate price do the other high retracement. Okay, let's say I buy from here, in as much that has already happened. Then I can start targeting as final target this particular high that I sold from the other day. Why? Because it's also out of session that I sold it. It was also out of my session. So these are cheats in market that explains how the algorithm of market works and how a complete daily cycle actually works. So you guys can see how conveniently after price induce what fall out of session, but target what fall out of session. Like that. That is how it is. It is just absolutely like that every time, every day. Before this sale started, what did he do? He rated this high. Why? That high fall out of session. It is very important. A high or low that fall out of session has to be induced before price can move. It is very, 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 very important. It is very, very important. Either internally or so, price induce this particular high here for the activation of this one. Now, the next target of price, for example, now, if I thought I want to sell this guy here, if I want to sell it, let's say I'm still bullish, though we have a roadblock already. What do I mean by a roadblock? Price that fall out of session has already been induced. So price can easily use this supply. This supply is valid as a POI now. Forget that there is something that fall out of session. In as much what fall out of session is not, don't worry when I get there, don't let me bore us without story yet. You understand how to use it perfectly. So this supply is valid. Price can use this supply to come and induce prices that fall out of session. It can come and induce them. Your first target, if I'm selling there, will be this. Last target will be what? Will be this. And then I can look for buy again below here to target where. Then if I look for buy again here, if price shifted, let's say, oh, what activated this was even Tokyo or even London, a major within London session. And I now see what? Intent. I don't even need to mark POI for this kind of trade. I say a break of structure and intent or something like that, I can easily buy knowing that price is now coming for this high, for this particular high. This is now my target. This next one that fall out of session. This particular guy right here. So when I treat it, you guys, you will find it so crazy and interesting actually, but that is for that. Do you guys understand? So that is majorly how it flows. So there are a lot of things. So that is where, so basically now what we are still doing as structural liquidity. That's why they are labeled liquidity traps and structural liquidity trap, because they are still structured, just normal PA. We have not gotten into in relation to time. Remember that structure is what you have on the y-axis. Most times you guys forget that. What you have on the y-axis is structure, that is your prices. What do you have on the x-axis? Is your time. On the x-axis of your chart is time. Price against time. That is how it is. Do you understand? So that is why it has to be two studies. So everything we have been doing is just based on what? Structure, prices alone. So when we are done with prices, we are now going to time. Okay, you have to study both y-axis and x-axis to be able to say that you can actually trade. I hope I'm making sense. So that is it. So timing is very, very important. Very, very important. Okay, so you guys can screenshot. You might see that this is exactly how this might happen. In fact, price can use this to now continue maybe far lower or something. Very possible. But this is what even if price wants to continue lower, I may project something like this, raise this, but I don't like predicting. But if you react accordingly and using the idea, I say just study it, go and watch that reel to have the settings of that indicator I'm using before we even get there. Just play around with it and see what I'm saying. So price induce that before maybe continuation of order flow. We just induce this high, maybe a little, and then immediately maybe start dropping to wherever it wants to continue. You can screenshot it, work with what I've said tonight when you watch the video. Go and watch it already to do the settings and watch it once market opens from tomorrow and see how exactly things work out around manipulation hours as liquidity. Is that understood? So very, very important. Sorry. So very, very, very important. All right. So without further ado, let's continue with tonight's business. So we have what? Model 3. So our model 3 says that what? After internal structure break, you already have a stop point, then price shifts still within structure. You know, this is like a major internal structure, break of structure again to the downside. The immediate high or low that is formed is now what we call what? Either price first came all the way to raise this external liquidity before inducing this high or not. This particular high right here is now the true primary liquidity. Is now the true primary liquidity because this low is the true minor break of structure. Is the true minor what? Minor break of structure, MBOS, then primary liquidity. So that is why I anticipate price to read it. Apart from the fact that it's fall outside what? Outside session. So it is as simple as that. So that is an example of model 3 or model 4 as the case may be. So I will show you more example on that so that we can actually move to structural liquidity trap for tonight. So I hope we'll get that. Do we understand that first example on model 3 and 4? Do we understand the first example on model 3 and 4 before I proceed? Hello, do we understand that example on model 3 and 4 before I proceed? Hello, are you guys with me? All right, yes, please. So what about other people? Do you guys understand the first example before I proceed? Please always do assignment immediately. Please. I appreciate people that are doing assignment. I will always, the time I will check your assignment. It might be this week. It should be this week actually. But today, because we are fucked up already, I really want to delve in. I was supposed to check assignment today, but this system I'm using might not last us too long for the purpose. Okay, great. Please always do your assignment immediately. I will check then definitely this week by God's grace. So let's see if we have our model. So let's see if we have it around there. Okay, which model do we have? I think it is shift and structure model that we have here. So it's a shift in structure model that we have here. So what do I mean by that? So we have a, this was the last break of structure to the downside, BMS to the downside. So after the BMS to the downside, what is our Q base? Our Q structure or Q base is the whole of this structure, isn't it? So apart from that, what the price do? So price was able to use part of that area. You know, it is a base on lower time frame. That structure, you know, price was forming a low, a high, lower, low, lower, high, lower, low, lower, high. So this was the last high that break the external liquidity here. Okay, so always follow the what? The thought process. Always follow the thought process. So after price reacted to that, what the price do? Price shifted against it. Can you see that? So by creating from this low to this high now, it's not about the distance. It's not something you use eyes to do. It is about thought process. It's how the algorithm is designed. So apart from shifting that way, what happened is did create our imbalance to complete our shifting structure between this low and this high. Imbalance, isn't it? So it's created it. So which means that between this low and this low, we already have our SMS established. Okay. So we have our estimate established. So in as much our SMS has been established in that scenario, then we now have the true minor break of structure after the SMSI, MBOS. So after the MBOS, what happens? These are the lows that are formed become the what? What is it called? Primary liquidity areas. So those become primary liquidity areas. So what do we expect price? So let me just pick the whole of the SC. As still demand, in as much price does not rate that low. So let's see, the price rate the low or not. Let's see. Remember that the condition is that price shouldn't rate it. Price mustn't have rated it. Okay. So let's see. So except if there is a mistake somewhere. Okay, price did rate this low, then something must be wrong. Something must be wrong internally though. Internally, something was wrong. Okay, let me check with session. Let me check with session. Why should price rate that low? Okay. Though they all fall outside session. Okay, they all fall outside session, but then it is not clear enough because they were many. They were actually many. Okay, they were actually many, but definitely it could have been a target of liquidity for price. They all fall outside session. I'm still trying to see why price rated that low. Because there must be reason. There must be reason. Structurally, let me do it structurally. In as much I've not taught you session, but it falls outside session, so that makes it a little bit justified. So let's check order flow from here. Okay. I think I found it. Sorry, I think I found it. Okay, so here, before the break of structure to the downside here, okay, then this was the last BMS to the downside. Internally, this was the last BMS. Break of structure, BMS, admit. So we have the last BMS to the downside. Then before that BMS happened, then we have a rally, a base, and a rally. This is a rally base rally. A rally, a base, and a rally. So our base becomes, this base becomes the Q base. Hope you guys understand that. Is it clear enough to you guys? There is always a reason for price. It is algorithm, it is fact and market. That's why I can bother myself to check what must have happened. No, sorry, draw base drop. I said rally base rally. Okay. Yeah, so you guys understand that. So a drop, a base, a drop. So you can see that that base is the one that break both this low. That is the last base that break both this low and the external liquidity itself. And the external liquidity it is a fact market. That's why I checked. It is a fact market. So in as much, so the true reaction to that particular base is actually this low, not this guy here. So this is the SMS. So this is the SMS. So let's now see, it mustn't rate this. If it's rate this, then I have no explanation for you. It mustn't have rated this. So this is that base. So this is a drop base drop. Okay. So this is the Q base that break both this structure and this structure. Okay. So if not that base, then I have no explanation for you. So I shouldn't have rated it no matter what. So this is the low that was formed from the reaction of that base. So let's trace it. Let's trace it all the way out. Let's trace it. Did they read it? Did they not? Okay. So you guys can see it didn't read it. Do you guys understand now? So D is our SMS leg. Please, do you guys get that? Do you guys get that? Structure and time, price and time, working together. Number one, why this low would have been liquidity is that it's fall out of session, isn't it? It is the immediate lows. They are the immediate lows that fall out of session. So number one, that could have made them targets. But number two, structurally, do we have it? Do we have that confirmation as well? Okay, so structurally, do we have that confirmation as well? We have that confirmation structurally as well. So very important. So structure and time. So after the break of structure, so that means this I, the break of this I is the true MBOS. This I right here. So which makes every other low formed. So that is when your equal low and trendline liquidity or all those nonsense, that is when they now become true liquidity price is targeting. So price doesn't just target equal high, equal low without a reasonable thought process. So that is the reasonable thought process you can get in price to actually what? To actually make things right. So see how far price actually shot up after doing that. So very, very interesting trade. Very, very interesting trade. So that is an example of an SMS zone. So I want to search for more of, what is it called? More of this guy, more of other ones. Okay, so I want to search for them. Okay, for this one, it didn't happen, but then it is something to actually study so that you would have known, because when we'll be doing true break of structure, some people don't even understand true break of structure and they will still be explaining it to you. You will believe they understand it. True break of structure is very simple, but it is based on every rule that you will be dealing. So you have to bring all rules together. Now, for example, look at this. This one did not happen. This one price actually reversed totally. But then you would have known that price will reverse. That is it. Where do you have a true break of structure? So when you have your true break of structure, you would have joined this buy. You wouldn't have been selling here. So, and that is what I want to show you based on model what? Model 3 of our stop points. Okay, you would have known the true break of structure. So here we have our BMS to the downside. Okay, so but before our BMS to the downside, we have the internal what? We have the internal BMS. Internal BMS. Internal BMS. After the internal BMS, okay, so then we have what? We have, okay, it's even happened. Imagine. It actually even happened. So after the internal BMS has happened, what happens? We have a what? It happened, but in a low degree. So after the internal BMS, that is what you want to look for. Remember, we have a stop point already. So that is not something I should be marking out every time, every day. So you should know that this is what? These are, what is it called? These are stop point right there. Then we have the internal BMS. So then what do you have? Order flow. Order flow. So look at it, order flow. So you have what? After the internal BMS, a low, a high, a low. The immediate high after that. So which means that this your immediate low is the what? Is the BMS. Isn't it? So that is your what? That is your minor break of structure. MBOS, minor break of structure. It actually did happen. So that is our minor break of structure. That is our minor break of structure. So after our minor break of structure, what happens? This high. So many of you guys on the norms, if you are not yet in this mentorship, what will you be doing? You'll be selling here, isn't it? Let's say you only watch my time frame different video, you think you've known it all. You've seen this imbalance. You'll be like, oh, this mitigated this. You mark this as break of structure. No, that's not true. But now that you know model 3 and 4, you should know that this high right here is what? Is your primary liquidity. This is your primary liquidity, according to model 3 and 4. Primary liquidity, just as I showed earlier, primary liquidity, and then what do you have? Your POR. Okay, your what? Your POR, exactly the same as the trade I explained here. Exactly the same thing as this one. Can you guys see it? Internal BMS, top point, order flows that shifted against demand, immediate high as primary liquidity. Okay. So that immediate I as primary liquidity, then we have your what? Your order flow. You have your order flow. So exactly the same as that. So let's check that as well. So you guys can see. Can you guys see that? MBOS. Okay, true MBOS, internal structure, true MBOS, break of structure, primary liquidity, then order what? Order flow. Okay, order flow. So let's see. According to that session, something that I brief you guys on. Let's see, would you have targeted this low? Or if this low is a roadblock, then you should have targeted this low. You shouldn't have targeted that one. If this low is a roadblock, then you should just target this liquidity here. Okay, that happened after the breakout of this high. So you should just target that one to be conservative as your first target. So, but let's see, is that low out of session? I mean, the external liquidity, is it out of session? It wasn't out of session. So this low would have been the best target that fall out of session. This low right here would have been the best target. That's where I would have targeted. So I won't lie to you about that. So that's where I would have what? I would have targeted as if I took that trade. So, okay, the reason, then my second TP will now be here. Come and see. Come and see what price seek below. Can you guys see it? This low and this low that fall out of session is what form true trend line liquidity. True what? True trend line liquidity. Let me be briefing you guys. Can you see? Fall out of London. Okay. This guy as well fall out of what? Fall out of New York. So that is what form true trend line liquidity. So these two lows will be my final target if price rate is not liquidity. But that first low will be my what? And you can see that immediately price actually what? Induced that first low. What did you see price do? Even before breaking external liquidity, can you see the retracement? Can you see the retracement? Price retraced deeply immediately after inducing this liquidity. So that is why they are very important. If you're an intraday trader, they are very, very important as something you want to see, work on. Okay, so that is it. So after price induced these two lows, then price met a what? A roadblock. That is it. Then price met a roadblock. Price met a roadblock. Price met a roadblock. And price used that to buy. Okay, so that is what constitutes a true trend line liquidity. So if I have sold from here, so as a scalper, I will take my partial here, and then as that I want to hold this longer, in as much primary liquidity has been induced, I'll be targeting these two lows. I'll be targeting these two lows as my final liquidity target. The indicators, sure, I've even given it for free already. If you are following TA with Andre, that TA with Andre that I said I will be dropping chart on, I just drop a reel there. If you go and watch that reel, it is this session liquidity that I explained there. But it's not all about it though. When you guys get there, I've even given them house for free there. It's FX market session. It's not something difficult. Even the settings I've given them. So yeah, exactly. So that is not something, don't worry. There is still more to it that they won't understand. But at least anybody that is trading already, that is an SMC trader, and that backtest just that cheat that I give them, it's enough for them to be scalping intraday and be profitable. That is just the fact. Okay, so that is majorly how it is. So that is majorly how it is. That is model 3 and 4. So without wasting much of our time, then for the next model, our time will soon elapse. Not next model now. What we want to start now, we are done with liquidity traps. We've dealt with primary liquidity, secondary liquidity, and range structure liquidity. We've dealt with common liquidity, specific liquidities, you know, the theorems and everything like that. So, which are very important. So the next thing we should move on to is to complete everything relating to liquidity trap. And to complete that, we have to deal with what we call structural liquidity trap. So I've sent you guys videos on that video on structural liquidity trap. Nothing else that I want to teach on structural liquidity trap than what I sent you guys. I mean, videos that are not with you guys. So if you have question on it, that is when you should ask. So I don't need to teach it at all. I have already sent you video on structural liquidity trap. I mean that one that spoke about beyond, with, and I think before. Okay, so beyond, with, and around. Sorry, beyond, with, and around. So that particular one is that everything I said there is the same. I will repeat here. So there is no need for repetition. So it's just for you to probably rewatch the video, since I have now dealt with liquidity for you guys properly now. Rewatch that video on structural liquidity trap. Okay, and ask any question that is not clear on it in the next class. I want to end this class now. It's not convenient for me using this laptop. Okay, it's not actually convenient actually. So I just had to use it since we couldn't use the tab. So please watch that video. So I'm done with liquidity trap and everything. So we are moving to the next thing on your syllabus in the next class. That's what I'm trying to tell you here, which should be maybe, I think, order flow. So that is the next thing we are moving on to. So anything on liquidity, please prepare all your questions. Ask them in the group. I will check through the group. Just drop your questions in the group. I'll check through the group before I do the next class on, that's Tuesday, right? So please, or if you have questions now, you can ask. So are we cool? I hope everything on liquidity is clear now. Are we good to go? Guys, are we good to go? Okay. Is there a time to look for the general primary liquidity as opposed to the four models we just dealt with? Or we should focus, you have to focus on the four models. There is nothing like time when it's related to them. Is as how price present them. For example, that's a good question though. For example, before you look out for this, okay, this liquidity must have been created before you look out for it, because this I could be the general one. So if this I is the general one, this will not happen. This middle one will not happen. It will just happen straight. Maybe this will just come and break this low first and come and induce it before doing that. Is the general model. Do you understand? But immediately this happen and create lower low, then you should know that you should look for this POI first. First thing first. Do you get it now, Julia? Do you get it? So that is it. So for SMS to SMS must have happened before you look out for it. Do you understand? So that is it. So they would have presented themselves before you actually look out for them. All right, so I believe that's all.